Don't buy another stock until you watch this video. What's up, family? It is Caden with Urban Finance. It is said that 90% of traders lose money in the market, so they aren't profitable. And as someone that is sitting on a multiple six-figure investment account, traders should really heed this before they buy another stock, especially if you're a new investor. If you're new to this channel, I talk about everything related to financial literacy, investing, and urban finance. And urban finance is literally whatever I feel like talking about, if I'm being honest. And if you haven't already, go ahead and smash the like button, because you know that really helps out the channel. Subscribe to the page and hit the bell to be notified of when I post something new. And if you're new to investing and want to get a free stock, check it in the description below for a link to sign up for Robinhood, and you'll get a free stock. All right, let's jump in. While it is often said the more risk you take on, the greater your reward, in the stock market, that is actually not always true. You can actually take a lot of risk on if you don't know what you're doing and get very little in return for it. And what I'm going to talk about today is one way to make sure you're not over leveraging yourself, and not necessarily from the point of borrowing money, but you're not extending yourself so much that you're becoming unprofitable in the stock market. Because the goal is to make money, not to look smart, quote unquote, or do clever and fancy trading strategies. Remember, the goal is to make money. And for Warren Buffett, rule number one is not to lose money. And if you can do that much, you will be successful over a long period of time. For this channel, I started a Robinhood account back in June of this year, 2020. And I add $500 to this account every month. And so that's not a ton of money. And for the day in this account, I'm actually up a little over 2%. And for the year in this account, I'm up over 11%. And sometimes that's 12, 13%. Sometimes that's 9, 8%. But the truth is, outside of this account, I invest almost $4,500. And so this is just a small fraction of what I'm actually putting in the market. And the truth is, most of the money that I invest outside of this account are actually in index funds, generally speaking, the S&P 500 index fund, and then some technology funds. And even within my Robinhood portfolio, as you can see, let's take a look. I actually have an index fund as part of this portfolio that makes up currently 15% of my portfolio. And eventually over time, this will probably be at least 50% of my portfolio. Yes, the S&P 500 fund will make up 50% of my portfolio, even in this very small portfolio that I'm doing for YouTube. So I have accounts with Vanguard, Fidelity, and Charles Schwab if you want to check out other brokerage. But the point of this is, in order to be successful in the market, you really need to know your goals. And let me take you on an example. Like I mentioned, I currently have over 6 figures invested in the market. And so let's start with that. Let's just start with 6 figures, $100,000. And outside of this account, for my household, we're adding over $4,500 into the market each and every month, both in retirement accounts and brokerage account. And so let's do that math. In the last 10 years, Vanguard's VOO fund, S&P 500 index funds, has averaged about 13%. That's in the last 10 years. And so let's just use an 11% return over the next 10 years. Not even including the money that I'm putting into my Robinhood account. If I just continue on my current pace, mainly in index funds, I will have over $1 million before I am 40 years old invested. And this type of investing, when you're investing in index funds, it's almost risk-free. Now, that doesn't mean that over the period of the next 10 years, my portfolio may not be cut in half. That's not to say that, but overall, over time, I'm guaranteed to be profitable while investing in the S&P 500. And so if you know that I have $1,000 to invest and I can guarantee certain return, that is how you break up your risk. And that's why even across all of my brokerage accounts, I always keep a large percentage of those invested in the S&P 500. And like I said, even eventually in my Robinhood account, I will have at least 50% of this portfolio being Vanguard's S&P 500 fund. And so let's even take a look at what that $500 looks like with this return. And my goal for this account is at least 15 to 20% return. Just in this account, adding $500 a month would put me at $121,000 in the next 10 years. In the next 5 years, just to make it a smaller time frame, I will have at least $50,000. And truth being told, I have no use for this money in the next 5 years or 10 years. Really, they're just going to be sitting there and accumulating more and more money. And I don't mean to make it sound like building wealth is a boring thing, but I have enough cash flow to sustain my living, and I have at least a 6 months emergency fund. And my point here is, yes, it is fun to invest in stocks, single stocks specifically, but also you really need to know what your goals are. And if your goal is only, let's say, to have $50,000 invested in the next 5 years in your brokerage account and you're adding $500 a month, then there's no reason to be overly risky. Yes, you want to take a risk and build money over time. One good strategy, which was actually recommended by Jim Cramer, so I'm not going to take his credit for it, is that your first $10,000 should be in Vanguard's S&P 500 fund. And in that way, even if you sold $1,000 when you reached to that $10,000 to pick up a new and innovative company, let's say NIO, you're adding $1,000, and from there you can really start building some serious wealth in the stock market. Because if you're doubling $100, that's not really that much money. But when you get to the point that you have $10,000 in your brokerage account at least, and then $1,000 to deploy to the next best company, that's how you really build wealth. And my point is this: when you're starting off investing, there is very little reason to be overly risky. So for me personally, who's adding $500 into this account, I will probably put $100 at least every month, or maybe every other month, into Vanguard's VOO fund. And for you, if you're investing a small amount, I will encourage you to also add a little bit of that money in an index fund. So all beginners should be taking some time, like I said, to dollar cost average into an index fund. And even while you're using that time, you can learn about stocks. And I'm not saying you can't invest in single stocks. I'm saying you also want to make sure some of your funds are secured, even in brokerage accounts. I know a lot of people think about dollar cost averaging into index funds when it comes to their retirement account, but you should be doing this as well in your brokerage account. And for example, let's take another look at VOO for me. Right now I'm up 6%, and I think I probably purchased Vanguard's VOO maybe in like September or something like that. And so that is easy money. That's how I always look at it, easy money. And even if it was to drop by 50%, then I'll probably really go heavy on it because I know it will be coming back up. So easy money. And that's how I looked at index funds, easy money. And that helps to balance your portfolio. So it wouldn't grow as fast as you potentially take all risky investments, but you can make sure you're not losing as well. And when you accumulate a lot of wealth in there, when you accumulate more money there, and even if you sell out of the index funds only when it's up, then you're able to purchase companies at a greater level. And so that's one recommendation. You know, I love investing in single stocks. I love doing the analysis and reading up about companies. I love seeing which is the newest innovative companies, and I will be making recommendations on this channel about those companies. For example, my next video, I'm thinking it's gonna be the top 3 EV companies to invest in, and that can potentially double, triple your money. But at the same time, do not take all of your money and put it in risky investments. You want to leave some of it for safer investments, grow that, and then you have a larger pool of money, to be quite frank about it, to deploy to a company that you feel very good about, very sure about. All right, so I hope you appreciated this level of transparency. And as I continue to make videos about which companies to invest in, myself and a lot of YouTubers will try to give advice on the best companies to invest in, which can really 2 times, 3 times your portfolio. But we all win some, we all lose some. And I don't want in the midst of it for people to be putting all their eggs in one basket, because that's not necessarily how you build wealth. All right, I hope you found this level of transparency helpful. If you have any questions at all, let me know in the comment section below. If you haven't already, check out this next video with a few stocks that I've sold, or you can check out this playlist that gives advice on how to invest in the stock market, both companies that I'm currently investing in, companies that I recommend, and investment strategies for beginners. But if you haven't already, smash the like button. It really helps out the channel. That's one way you can support the page. Subscribe to the page and hit the bell to be notified of when I post something new. And like I always said, even in the midst of these crazy times, God bless you, and remember to live your best life.